This video is all about deal sourcing for beginners. So what is deal sourcing? Well, very simply, it's about going and find a property that's going to be a great deal. And in a minute, I'll tell you what a great deal is. So my name's Simon Zutshi. I'm the author of Property Magic, the Amazon #1 property bestseller. I'm the founder of the Property Investors Network, and I've been investing in property since 1995 and teaching other people how to be successful investors since 2003. One of the most important things you need to learn to be a successful investor is how to find great property deals. So first of all, you kind of need to know, well, what makes a good property deal? So a couple of criteria I want you to think about. First of all, if we can buy a property for less than it's worth, so maybe worth 200,000, we can find someone who's what we call a motivated seller. They need to sell quickly, they want speed and certainty. We might be able to buy that house for 180, 160, or maybe even 150,000 pounds. And that's quite a big discount. But actually, when you find motivated sellers, you can save tens of thousands of pounds off the purchase price. So if we can buy at a discount, we buy for 170, it's worth 200, it means the day we buy, we get 30,000 pounds of instant equity. So that's the first thing we want to look for. Sometimes we will pay for full market price, and I'll explain why we might do that later on, but buying with equity on day one is always a good thing. The next thing is this. We want to make sure we buy a property in an area of strong rental demand. We want to be able to quickly and easily rent it out to new tenants if the current tenants move on. Linked to that, we want to make sure we get cash flow. What that means is when we take the rental income each month and we pay the mortgage, we pay the insurance, we pay the management fees, anything else, there must be some profit left over. That's what we call the cash flow. We only ever buy properties that have positive cash flow. The next thing is it's great if we can buy a property where we can add value. If you buy a brand new property, well, we can't add any value to that. If we buy an older property, then we can do things to increase the value. Maybe we can renovate it. We can put a new kitchen in, new bathroom, new carpets, we can paint it. And what was a bit of a tired house suddenly becomes a really desirable property again. Maybe we can extend it, do a side extension, convert the garage into a room. Maybe we can extend at the back, go into the attic. In some areas in London, it's even worth digging down into the basement because space is at a real premium. So what can we do to add value to the property? And sometimes we might actually buy a property at full market price. Maybe it's worth 200,000 pounds, and by spending 30,000 pounds on it, might cost us 230 in total, we can make the value maybe 300,000. So if we can add value to a property, there's maybe a good reason to actually buy it at the full market price. The next thing we want to do is if we can minimize the amount of money we put into the deal. That's always good because that means you can buy more deals. And finally, we want to try and maximize the return on investment. So return on investment is a comparison of how much does it generate for us every single year compared to how much we have to put in to get that cash generating asset. So it's a percentage. We multiply by so we take the annual profit divided by the initial investment, multiply that by 100 to give us a percentage. The higher the percentage, the better the deal is for us. So when we're looking for great deals, and we need to understand what makes a great deal, we look for as many of these criteria as we possibly can. If a deal's got all of those criteria, you need to move really quickly, because if it's a great deal, guess what? If you don't buy it, someone else who's quicker will come in and snap up that great deal. So by educating yourself, by learning what makes a great deal and moving quickly when you know we've got a great deal, then you're going to be a more successful investor. Usually you want to pick an area, sometimes called a gold mine area, you want to focus on. Typically it should be close to where you live or where you work, because you're going to have a better understanding of which are the good areas, which are the not so good areas. But if you have a bit of a power team, i.e. people around you who can help you, maybe you can invest further afield. But most people, starting for beginners, where you live or work is a great place to do. If there are no deals, or you don't think there are deals right where you live, try going out maybe 45 minutes from where you live and draw a little radius around. Somewhere within that radius, there's going to be an area where deals stack up better, maybe than where you live, and that's the area to focus on. So I do hope it's been useful. If it has, please post questions below. Please feel free to like, to share, and why not come and subscribe to the channel as well. My name's Simon Zutshi. I encourage you as always to invest with knowledge, invest with skill.